Imagine vast factory floors. They are buzzing with renewed energy. This is happening across China now. Millions of workers are busy. Machines hum a powerful tune. This is not just local news, it is a global economic event. The world's workshop is awake. China's manufacturing sector is huge. It is often called the world's factory. For months, things were quieter. The pandemic caused many disruptions. Global demand also saw some shifts. Now a change is clearly underway. The scale of this revival is immense. It signals a new phase for global trade. This resurgence is vital for many. Think about the products you use. Your phone, your car, your clothes. Many parts come from China or they are assembled there. So when China's factories speed up, the impact is felt everywhere. It touches lives in countless ways. The energy is almost palpable. Reports describe lights on lake, trucks are lining up at ports, goods are moving once again. This is more than just recovery. It could be a re-energizing of China's role in the world economy. A powerful engine is revving up. Numbers are telling a clear story. One key indicator is the PMI. This is the Purchasing Managers Index. When it's above 50, it means growth. China's PMI has climbed recently. It has stayed above that vital mark. This shows manufacturing is expanding. Factories are buying more materials. This isn't just one isolated signal. We see positive signs in many industries. Take car manufacturing, for example. Production lines are speeding up, both for cars sold in China and for those exported globally. Electric vehicles are a big part. China is a leader in this area. Electronics are another key sector. Demand for smartphones and computers and all sorts of gadgets is constant. Chinese factories are meeting this. They are ramping up production. This helps keep global supplies steady. It prevents shortages of popular items. Your next tech purchase is linked. Other data supports this trend. Export numbers are looking stronger. Industrial output figures show increases. Electricity consumption in industrial zones, that too is often on the rise. These are all pieces of a puzzle. They fit together to show growth. The factory pulse is getting stronger. So, what is driving this rebound? Several factors are working together. The Chinese government is playing a role. They have introduced supportive policies. These aim to boost manufacturing. Think of tax breaks for businesses, or measures to make lending easier. This helps factories invest and grow. Automation is also a big part. Chinese factories are using more robots and more advanced technologies. This increases efficiency greatly. It allows them to produce more, even with changing labor dynamics. Robots can work around the clock. This boosts output significantly. Global companies are also contributing. Many businesses had reduced their stock. This happened during uncertain times. Now they need to restock shelves. They are placing more orders with their suppliers in China. This is called a restocking cycle. It is giving factories new business. Furthermore, domestic demand in China, while still facing some challenges, is also showing signs of life. Chinese consumers are buying goods. This creates a base level of activity for the factories within the country. So, it's a mix of forces, both internal and external. China's factory revival matters to you. It directly affects global supply chains. These are the networks that move goods from where they are made to you. When China produces more smoothly, these chains work much better. This means fewer delays for products and more availability in stores. This can also impact inflation. Remember when prices were rising fast? Supply chain problems were one cause. If China makes more goods and gets them to market efficiently, it can help ease price pressures. More supply can mean stable prices or even lower prices for some items. For investors, this is a key signal. A strong Chinese manufacturing sector can indicate health in the global economy. It might suggest where to invest or how different markets might perform. Commodity prices are also linked. China buys lots of raw materials like metals and energy resources. Ultimately, this impacts your daily life. The cost of goods in your shop, the availability of new products, the health of companies you might work for, or whose shares you might own. A stable Chinese manufacturing base contributes to a more stable world market. It makes global commerce more predictable. It's not just the usual partners. China is trading more with new regions. Countries in Southeast Asia are key, nations like Vietnam or Thailand. They have strong economic ties with China, they are part of its supply chain, and also growing markets for goods. This two-way trade is increasing. Africa is another important example. China has been investing there for years, in infrastructure and other projects. Now, trade in goods is also growing. China imports resources from Africa and exports manufactured products to it. This creates new economic links and opportunities for both sides. These expanding trade relationships show a diversification for China. It is not solely reliant on its traditional export markets like the United States or Europe. While those remain very important, newer routes are gaining traction. This is a strategic shift. For these other countries, it means access. Access to China's vast market and access to its manufactured goods. It can fuel their own growth and help them develop their economies. Of course, there are complexities and questions about these relationships, but the trend of growing trade is clear. However, the picture is not all rosy. There are significant risks and concerns. China's property market is one. It has faced serious troubles. This can affect consumer confidence and overall economic stability. A struggling property sector could dampen the manufacturing rebound. Unemployment is another challenge, especially youth unemployment in China. A strong manufacturing sector needs workers, but it also needs skilled workers. Matching jobs to people is crucial. If many people cannot find work, it can create social and economic strain. This could slow down domestic demand. Trade tensions are also a major factor, with the United States and Europe. Tariffs and geopolitical disagreements can disrupt trade flows suddenly. This creates uncertainty for businesses and it can make long-term planning hard. These tensions have not disappeared, they remain a significant headwind. So, while the factories are humming, these underlying issues need watching. The recovery is happening, yes, but it faces internal pressures and external geopolitical complexities. These factors could slow momentum or even create new problems. The path ahead is not guaranteed smooth. So, the big question remains, can this manufacturing rebound last? Will it be a sustainable recovery, or is it a temporary bounce? There are arguments on both sides. The positive signs are encouraging. The data, the policy support, automation. These are real drivers of activity, but the challenges are also very real. The property sector's deep issues, the need for more consumer spending, and the complex global political scene. These are not small hurdles to clear. China's economy is at a crossroads. It is trying to shift its growth model towards more innovation and consumption. The world is watching very closely because what happens in China does not stay in China. Its economic health is linked to ours. A sustained recovery would be good news for global growth and stability. It could mean more predictable trade and potentially lower inflation. Ultimately, the future is unwritten. The coming months will be crucial. We will need to see if growth broadens beyond just the factory floor. Will Chinese consumers start spending more? Can the property market stabilize? These are the questions to ponder. The dragon has stirred, but for how long? And with what lasting global impact?